The past cycle top indicator has accurately predicted its fair share of Bitcoin tops in the past. The last 4 times it flashed a top signal, Bitcoin crashed between 52% and 86%. It's John from StopSaving.com here, and in this guide, I'll explain how the past cycle top indicator works and how to use it to help you potentially spot Bitcoin's next peak. So before I explain how the past cycle top indicator works, let's first see exactly how accurate it's been in the past. Well, the indicator has had 4 Bitcoin top signals since 2013. Each signal occurred within a few days of a major peak in Bitcoin's price, and this chart shows how each one panned out. The first top signal was on April 5th, 2013, with Bitcoin's price dropping 65.5% over the next 11 days. The price almost doubled in the first 4 days after the signal, but that rally wasn't sustainable. Personally, I wouldn't put too much weight on the 2013 signal though, as Bitcoin's total market size was just a few $billion back then. That made Bitcoin much more volatile because it took much less trading volume to move the price. The second top signal was triggered on December 3rd of 2013, just 1 day before Bitcoin's actual peak for that cycle. Over the next 623 days, Bitcoin's price dropped by 86.11%. The third top signal happened on December 16th, 2017. Again, just 1 day before Bitcoin's bull market top for that cycle. When the signal flashed, Bitcoin sunk 84.03% over 364 days. Finally, the fourth Bitcoin top signal was on April 12th, 2021. 2 days later, Bitcoin's price peaked at just under $65,000 a coin. From April 12th until June 22nd, that's 71 days, Bitcoin dropped by 52.94%. This percentage drop wasn't as big as the others, but Bitcoin's market size was a lot bigger by then, being well over $1 trillion. So, given the stats over here, I would definitely take the past cycle top indicator seriously the next time it fires off. Just keep in mind that Bitcoin also peaked without the signal in the past. That happened on June 26, 2019, when Bitcoin shed 71.98% over 261 days, and again on November 10th, 2021, when Bitcoin crashed 77.57% over 376 days. Okay, so we know the past cycle indicator has been pretty accurate in the past, but how does it work exactly? Well, the indicator was first created by Philip Swift, a crypto analyst and founder of the crypto analytics website Look Into Bitcoin. Here's how it works. The indicator gives a top signal when Bitcoin's 111-day moving average, this orange line, crosses above double the value of its 350-day moving average, which is the green line. Here, a moving average is simply the average of Bitcoin's price over the past X number of days, and it keeps updating each day. Check out our free technical analysis course if you'd like to learn more about that. I've left a link to that in the description. As for why the past cycle top indicator works, I have 3 theories, and it might be some combination of them. The first theory is that the moving average cross shows an extended rally. When the shorter term moving average crosses above double the value of the longer term one, it means Bitcoin's rally is very extended, and you should probably expect a pullback. The next theory involves the mathematics of pi. Dividing the past cycle top's 2 moving averages, 350 by 111, gives you 3.153, and the Greek letter pi represents the number 3.142 to 3 decimal places. Pi has all kinds of mathematical relationships in nature. For example, pi is the ratio of a circle's circumference to its diameter. It appears in the calculations of wave patterns, and it even helps describe the shape of rivers. Pi also pops up in various outer space cycles like moon phases and planet orbits, and maybe that's why it works for Bitcoin cycles too. And here's the final theory. Traders monitor the indicator. The past cycle top indicator is well known among crypto traders and investors, So when it flashes a top signal, many might sell their Bitcoin just in case. And as a side note, the golden Fibonacci ratio is another mathematical formula that works well in the markets. See the link in the description for our Fibonacci trading guide so you can get the lowdown on that. And now for the main question of the day. What does the indicator suggest about Bitcoin's next top? Well, the two moving average lines of the Pi Cycle top indicator are both sloping upward right now. The orange line is getting closer to the green line, but crossing it might take a while. So if you're going strictly by the indicator, Bitcoin's cycle hasn't ended yet, and the bull market run probably has further to go. That said, if you see Bitcoin's price drop below the orange line, that's the 111-day moving average, first, then you might want to be cautious. That happened a few months after the June 2019 top and a month after the November 2021 top. Remember from earlier that the moving average cross signal did not identify these two Bitcoin price peaks. On the flip side, if you see Bitcoin climb above the green line, that's double the 350-day moving average, its price could quickly accelerate higher. According to the indicator, that's usually the final stretch of the bull market and also the most volatile. So, should you use the Pi Cycle top indicator in your strategy? The indicator has an excellent track record of flashing accurate Bitcoin top signals, so far at least. So yes, it's definitely something to consider in your strategy. Just don't rely on it blindly. After all, Bitcoin has a habit of doing the unexpected. I'd also add that Bitcoin is now a much more mature asset than when it last fired a signal. There are Bitcoin ETFs now, along with more institutional interest. Institutions understand that retail investors pay close attention to well-known indicators like the Pi Cycle top, and these big market players might try to use that to their advantage. To understand more about how that works, I recommend our free Wyckoff guide, and there's a link to that in the description too. If you'd like to use the Pi Cycle top indicator, it's also available on TradingView. Check out our TradingView tutorial here to learn how to add indicators like it to your price chart. As usual, none of this is investment advice. If you found value in this video, remember to subscribe to the channel and click the notification bell to get these videos as soon as I publish them. And don't forget to like the video if you did. This helps our content reach more people on YouTube. You can also find a more detailed written version of this video on our website, stopsaving.com. I'll leave a link to that in the description too. So thanks for watching and take care.